I just wanted to say for the benefit of our colleagues and friends who have joined us here, but the transaction advisors said we should do it quickly. Market was good in September, and we should just do virtual roadshows, which we did. And listening to them yesterday, it was a good strategy, as I believe rates have gone up or something, so it was a good strategy for us. But we did promise that we would still meet with investors. So we decided to run with I believe the original date, the last date you gave us, which is October 13th while you are here. So we raised $4 billion. The National Assembly knows what is in the 2021 budget is about $6 billion for new external borrowing. We raised $4 billion. There was an order book of $12 billion. But we advised that $4 billion was a good volume, to keep the secondary market going and to retain investors' appetite and interest. And after this, the transaction parties would advise us when and if, we should tap by raising the outstanding sum of $2 billion. But I also know for a fact that we're still looking at other options. So I just thought I should set the agenda before we hand over to you or the transaction parties. Thank you very much.
We projected an overall deficit of 6.26 trillion naira, which is 3.39% of the GDP. The Fiscal Responsibility Act puts a threshold of 3%, but that same act in Section 12, verse 2 says that if at any time in the opinion of the president, the country faces significant, threat, national, security threat, that threshold can be exceeded. And with the combination of the war against insurgency and other security challenges and the continuing fight to push back COVID-19, it's in the opinion of the president that there's justification for exceeding that threshold, and the National Assembly accepts that that is the case. So we are well within the confines of the law. For 2022, the deficit is almost entirely going to be financed by borrowings, a combination of new borrowings for about 5 trillion naira and drawdowns on already negotiated multilateral and bilateral loans. The only other projected source for now is proceeds of privatization, which is just 90 billion naira out of that. The one big thing to note about 2022 is we have what we call a hybrid fiscal model. The first 6 months, from January to June, are based on the current model with respect to the petroleum industry. We project that implementation of the Petroleum Industry Act will kick in from mid-year, from 1st of July. So the first half of next year is projected on what we call the business as usual model. And the second half from July to the end assumes that the PIA will become operational. And so we have therefore allowed for continuing payment of subsidies up to mid next year, June, and that's. But beyond that, there isn't any provision for subsidies in the budget.
The second point is to say that in Nigeria, borrowing is very much regulated by laws, and borrowings take place only with the approval of the executive as well as the legislature. The third point is to say that the Nigeria practices has adopted some of the best debt management strategies, recommended by the World Bank and IMF. We do a debt sustainability analysis every year, and we also do a medium-term debt management strategy every year. It is also on record to say that Nigeria has, since exiting the Paris Club, consistently serviced both its local and domestic debt. Okay, so what we have here, there are some slides there, but let me quickly say that we do have a new debt management strategy, which was approved in February, which is what we're running with now. So after the borrowing has been approved by the legislature, the debt management strategy is that document that tells us how we're going to manage the existing stock, how we're going to do the new borrowing. Should it be external? Should it be domestic? Should it be short-term? Should it be long-term? Okay, so the strategy we had previously expired in December 2019, and we have a new strategy for 2020 to 2023, which I should say is COVID compliance. So we have taken into account the various developments that have happened to the global economy as well as to Nigeria within, as a result of COVID, and factored that in. So one of the first things that I would say is that we actually implement the strategies. They are approved at the highest level of the executive arm of government. We had a minimum average portfolio tenure of 10 years. We exceeded that. We were at 10.5. We wanted, again, to manage refinancing risk for the domestic debt. We wanted the minimum long-term to be 75% and maximum 25%. We actually had a minimum long-term of 81%. So we exceeded most of that. I won't read all of that out, but it is in the presentation which you have seen. Okay, so the new strategy which we're implementing has a few changes. Like I said, it is COVID compliant and also takes into account some of the developments that are happening within the economy. So the first one, for instance, is that the public debt, total public debt to the GDP, which most of you knew was 25% for many years, is now 40%. Okay, and the purpose of the increase to 40% is threefold: to accommodate new borrowings by the government, to accommodate the ways and means advances of the FGN, of the federal government at the CBN, which we are hoping to securitize in as soon as is possible. And then the government is also making payments through the issuance of sovereign promissory notes for arrears to various vendors, construction companies, exporters, oil marketing companies, various areas. So those are already being recorded as part of the debt stock as they're included. So the 40% is really to recognize existing liabilities that will soon crystallize in the debt stock, as well as accommodate new borrowing. The other thing that changed is the mix of the portfolio, which was 60% domestic before and 40% external. Again, because there's a lot of domestic debt coming in through ways and means as well as promissory notes, that ratio has changed to 70% domestic and 30% external. Again, it takes into account the fact that sometimes, as we saw last year, accessing capital externally may not be so easy, but because we have a robust domestic market, we should be able to raise money within the local markets as we did last year. I think the other significant change or introduction, this is an introduction in the medium-term debt management strategy, is that we now have a limit for guarantees. We didn't have any previously, but we have one now, just to align with the direction of government of trying to encourage the private sector to finance critical infrastructure and other facilities. So we imagine that the private sector may be asking for support by way of guarantees. So it is at 5% of GDP. It is currently only about 1.5%, so there's significant room for that. Again, when you take into account the fact that the GDP is growing. The fact is that the debt to GDP ratio is still extremely low, whether we're looking within the continent of Africa or outside. Where we do have a challenge is debt service to revenue, which is why there's a lot of discussion around how we can improve revenues. That would help to probably reduce, should help to reduce the level of new borrowing, but it will improve the debt service to revenue ratio. Again, in the domestic and international markets, in line with our policy of issuing long-tenured securities as a way of managing our liabilities, we do have a domestic sovereign yield curve extending up to 30 years. We have the same in the international markets as well. So our maturities are pretty spread out into the future. Again, in the domestic market, because that we contributed to developing the market significantly, but because the government is still an active player in that market, we have a wide range of products to meet the needs of various investors. So between 2017 and I would say, from 2017 actually, or all of it in 2017, we introduced about 3 new products to appeal to various investor categories. We had green bonds, we have the Sukuk, which is a non-interest bearing product, then we have the savings bond for the retail investors. We still have our bread and butter products for raising funds, which are treasury bills, short-term, and then the federal government of Nigeria bonds, which extends to 30 years. So whether you're a short-term investor or a long-term investor, there's a product that is appropriate for you. And then in the international markets, on the external, we are still largely concessional, and that means that we still have room for external borrowing. So I'll stop here, and when we get to the Q&A, if there are any, we will take them. Thank you.